For almost a century, there's been one currency that has shaped our global economy, and it's influenced everything from how countries trade with each other to the money right there in your wallet. And that currency, of course, is the US dollar. Since the end of World War II, the dollar has been the undisputed king. It makes up a whopping 58% of all foreign currency reserves held by central banks all over the globe. I mean, to put that in perspective, just look at the chart. No other currency even comes close. It's not even a race. But the world is changing, right? There's this series of pretty unprecedented challenges. We're talking geopolitics, we're talking domestic policy, and they're all starting to chip away at the dollar's very foundation. This has economists and world leaders asking a question that honestly was once unthinkable. Is the king's reign actually about to end? So in this explainer, we're going to break all of this down. We'll look at how the dollar got so powerful in the first place, we'll examine the very real cracks that are now appearing in its foundation, and we'll explore what a shift in this global financial order could mean for all of us. So when we say the dollar is dominant, what does that actually look like in practice? Well, its power is really felt across three critical dimensions of the entire global economy. First, it's the currency of trade. Over half of all global commerce is priced in dollars, even when the US isn't even part of the deal. Second, it's the ultimate safe asset. Countries hold dollar reserves to protect themselves from financial storms. And finally, it's the currency of investment, and that's all thanks to the massive and super accessible US capital markets. But this incredible power didn't just happen by accident. It really rests on three foundational pillars, which were carefully constructed over decades. These pillars are the system itself, the unique benefits that system provides the United States, and then there's the most important and maybe the most fragile ingredient of them all, trust. The first pillar is the system. Now, this was formalized after World War II, but it got supercharged in the 1970s with the petrodollar. By making sure that oil, the world's most vital commodity, was priced in dollars, the US basically guaranteed that any country that needed oil would also need a constant supply of dollars to buy it. Pretty smart, right? And this leads us directly to the second pillar, what's known as the exorbitant privilege. Because the whole world needs dollars, the US gets to borrow money cheaply and can use powerful financial sanctions as a tool. But this privilege, well, it isn't free. It comes at the cost of these huge trade deficits, and it makes it way too easy to rack up staggering levels of national debt. But none of it works without that third pillar, trust, with a capital T. This is about global faith that the US will act like a predictable, responsible manager of the world's financial system. It's trust in its institutions, its laws, and critically, in the independence of its central bank, the Federal Reserve. For a very long time, that trust was just a given. But after the 2008 global financial crisis, which, remember, started in the US, other countries started to get a little uneasy about being so dependent. And that's when the first cracks started to show. The decade after the crisis saw this slow but steady rise in what's called de-dollarization efforts. Countries like China and Russia got really wary of US sanctions, and they started building their own parallel systems, everything from new payment networks to oil contracts priced in their own currencies. It was all a bid for more financial autonomy. Now, those were cracks around the margins. But now, analysts are arguing that, quote, this time really is different. Today's challenges aren't just hitting the edges of the system anymore. They're attacking all three pillars of the dollar's power at the same time. First, the system of global trade is being totally upended. Projections show that the average US tariff rate could hit 18.6% by 2025. That's the highest level since 1933. These tariffs have basically rewritten the rules-based order that the US itself spent decades building. So instead of being the system's insurer, some now see the US as just an extractor of benefits. Second, that privilege is being questioned. I mean, skyrocketing deficits and all the political fighting over the debt limit have really shaken investor confidence. This chart here is pretty remarkable. For the first time, financial markets actually saw the US as having a higher risk of default than any of its G7 peers. America's exorbitant privilege seems to be disappearing.
And third, that huge pillar of trust is being directly attacked. Political pressure on historically independent institutions, like the Federal Reserve, has set off alarm bells all over the world. As the economist Eswar Prasad put it, this is seen as an open war on the U.S. institutional framework.
So here's the crucial point. The dollar is under some serious pressure, but there is no clear successor ready to take the throne. This has created what analysts are calling a financial interregnum. It's a period where the old ruler is weakened, but a new one hasn't emerged yet. And this table here, it shows the dilemma perfectly. The euro doesn't have a unified bond market, China's renminbi is held back by capital controls and a serious lack of trust, and while gold is a reliable store of value, it just doesn't work as a modern currency for global trade.
So the result isn't a new king. It's a much more messy, multipolar world. Instead of flocking to one new currency, central banks are diversifying. They're buying up record amounts of gold and they're experimenting with digital currencies, all to create a financial system that's less dependent on any single country.
Okay, I know this might all sound like really abstract geopolitics, but a shift away from dollar dominance isn't just about central banks and foreign policy. It has direct consequences for your wallet. Remember that exorbitant privilege? It means lower borrowing costs for the US government, which trickles down to lower interest rates for everyone on mortgages, car loans, business loans, you name it. If global demand for dollars falls, that privilege fades. The cost of everything from your next iPhone to your weekly groceries could go up. And beyond our wallets, it would mean a significant reduction in America's influence on the world stage. Look, the dollar's reign isn't ending tomorrow. The network effects that keep it in place are incredibly powerful. But the pillars that held up its dominance for 80 years are, without a doubt, shaking. And that leaves us with a critical question for the coming decade. What happens to the world when the very foundation it was built on begins to shift?